Another weekend and we're back with your all-in-one show on corporates and startups, Companynama. I'm Sresha Tiwari, kicking it off with the corporate updates first. Tata Motors has started talks with several sovereign wealth funds and private equity investors such as Abu Dhabi Investment Authority, Mubadala Investment Company, Saudi Arabia headquartered Public Investment Fund PIF, Temasek Holdings as well as KKR and General Atlantic to sell a significant minority stake in its EV division. According to a report in the Economic Times, the company is looking to raise up to $1 billion through this sale. In another news, the company has inked an agreement to supply 25,000 EVs to Uber. The joint venture between Anil Agarwal-led Vedanta and Foxconn on 28 February announced that it will set up the semiconductor and display manufacturing facility in Dholera Special Investment Region near Ahmedabad, Gujarat. The Vedanta-Foxconn joint venture in September last year signed a memorandum of understanding with the Gujarat government to invest 1,54,000 crore rupees to set up the semiconductor and display manufacturing plant. SpiceJet is likely to sell a 5% stake in the airline to its largest lessor US-based Carlyle Aviation Partners. Under the proposed deal, which comes as a relief to SpiceJet, one of its biggest lessors, which is Carlyle, which has leased 13 Boeing 737s to the airline, is expected to convert over $100 million of outstanding dues into equity in SpiceJet and compulsorily convertible debentures, which is CCDs, in the cargo arm Spice Express. The proposed deal has valued SpiceJet's logistics subsidiary Spice Express at over $1 billion in a deal with Carlyle. Low-cost carrier SpiceJet stocks were down by nearly 1% on the stake sale news after the stake sale news on 23rd February. Drug major Sun Pharma has announced that it has announced a 26.09% stake in Agatsa Software Private Limited, which is in an early stage digital diagnostic devices company, for 30 crore rupees in two tranches. The acquisition will be made in two tranches, wherein tranche 1 will be of 8 crore rupees, would be completed in February 2023, and tranche 2, which is up to 22 crore rupees, is expected to be completed by August 2023, subject to certain conditions, the company said in a filing. The Mumbai-based company has also acquired 27.39% of Remedio Innovative Solutions Private Limited, which provides innovative products enabling early detection of eye diseases, for 149.9 crore rupees. Food aggregator unicorn Zomato has launched its remodeled home-cooked meal service, Zomato Everyday. Everyday seems to have replaced Zomato's Instant, which was discontinued last month, under which the company had planned to offer 10-minute deliveries to select food items. Although there is no official confirmation over it, Zomato Everyday is presently available in selected areas of Gurugram, starting at 89 rupees for both breakfast and lunch. The race to buy the debt-laden SKS Power generation has narrowed down to just 4 bidders, which are Reliance Industries, Public Sector Utility NTPC, Gujarat-based Torrent Power and Singapore-based Vantage Point Asset Management. These companies have indicated their willingness to increase bids to what the company owes creditors. Indicative bids from Nagpur-based Sarda Energy and Minerals, Delhi-based Jindal Power and Adani Group are much lower, and these bidders are no longer considered strong contenders to take over the plant. FMCG major Hindustan Unilever on 17th of February announced that it has signed an agreement for the sale of its atta and salt business carried out under the brands Annapurna and Captain Cook for 60.4 crore rupees. The brands are being sold to Uma Global Foods and Uma Consumer Products Private Limited, which are subsidiaries of Reactive Brands International, a Singapore headquartered company and an affiliate of CSAW Akbatar. CSAW is focused on acquiring and scaling up food brands to promote affordable wellness. Moving on to the segment surrounded on major controversies and disputes around corporates. Now, which were those companies that were on the radar this week? Let's find out. The National Company Law Tribunal has allowed insolvency proceedings against Zee Entertainment Enterprises. The order comes on a petition filed by Hindustan Bank after the company failed to fulfill its obligation under a debt service agreement between the bank and City Networks. Under the terms of the agreement, Zee had guaranteed Hindustan Bank a 150 crore rupees loan to City Networks, which was supposed to maintain an amount equal to 1/4's interest and principal at all times, which Zee failed to do. And on 23rd February, Zee moved NCLAT against NCLT, admitting Hindustan Bank's challenge to Zee-Sony merger. Zee Entertainment has filed an appeal seeking relief against the order passed by the Mumbai bench of the National Company Law Tribunal. The NCLAT on 21st of February concluded its hearing and reserved its order over the petition filed by the lenders of Reliance Capital seeking a second round of financial bids for the debt-ridden firm presently going through the insolvency resolution process. Senior advocate Mukul Rohatgi, representing Torrent Investments, concluded his arguments and submitted that the Insolvency and Bankruptcy Code intends for maximization of the value, but the focus should be on the revival of the assets. Rohatgi contended that IBC is not a debt recovery platform and the Committee of Creditors should look beyond their individual recovery. The government has opposed Hindustan Zinc's proposed $2.98 billion acquisition of zinc assets from Vedanta. A letter from the government to the company showed on 20th of February. The government will oppose any further resolutions on the deal and explore all legal avenues available to it, the letter has said. Directors nominated by the government at Hindustan Zinc had dissented to the proposed deal announced on January 19th, the letter showed. Hindustan Zinc, in a stock exchange filing, acknowledged the letter sent by the Ministry of Mines and the government, which owns a nearly 30% stake in Hindustan Zinc, is against the miner buying some Africa-based zinc assets from Vedanta Limited, its top shareholder with a near 65% stake, as it was a related party transaction. And in a latest on Adani on 22nd February, in a stock exchange notice, Orient Cement said that it has terminated a proposal by Adani Power Maharashtra to set up a grinding unit. The decision follows APML's inability to obtain the required MIDC clearances for subleasing the parcel of land required for cement grinding unit due to some legal issues. Also, the timeliness agreed as per the MOU has crossed. In other news, Gautam Adani has decided against bidding for a stake in state-backed electricity trader PTC India as his business empire looks to preserve cash amid criticism from a US short seller. Remember, Adani was among the possible bidders reviewing preliminary information on the Mumbai-listed company, which the Bloomberg News reported in January as well. Also, what is being said that to be a comeback strategy of the Adani Group, Adani Ports and SEZ paid SBI mutual funds the due amount of 1,500 crore rupees on 20th of February and will also pay another 1,000 crore rupees of commercial paper due in March as per the payment scheme. The sell-off in Adani Group shares deepened on 22nd February with the conglomerate's total market capitalization falling below the 8 lakh crore mark amid a broader decline in the stock market. The group shed nearly 53,000 crore rupees in the market value to 7.55 lakh crore rupees on Wednesday after its stocks dropped between 4 to 11%. Pune-based labour union Nascent Information Technology Employees Senate has filed a complaint against the IT major Wipro with the Central Labour Ministry alleging unethical reduction in salary offers of more than 4,000 candidates. The labour union in its complaint letter has said that the revised offer letters assured immediate onboarding to freshers if they accepted a reduction in the CTC, which is a clear violation of the terms of the offer letter and breach of contract. The initial CTC or salary being offered was 6.5 lakh rupees and the fresh CTC being offered was 3.5 lakh rupees. And over to our showdown segment, let's take a look at what went on in the startup world this week. FreshToHome, an online consumer brand for fresh fish and meat, on 22nd February closed at $104 million in Series D funding, with Amazon Sambhav Venture Fund leading the round. Existing investors in FreshToHome, including Iron Pillar, Invest Corp, Invest Corporation of Dubai, Ascent Capital, and others, have also participated in this round. New investors joined the round, including E20 Investment, Mount Judai Ventures, and Dala Al Baraka. JP Morgan was the placement agent to FreshToHome for the fundraise. The current funding will strengthen FreshToHome's mission to make 100% preservative and antibiotic residue-free fish, seafood, and meat accessible and affordable to millions of meat lovers. Walmart-owned online retailer Flipkart is in talks to acquire a stake in Bengaluru-based Pharma in what would be its second such deal in the Indian online pharmacy market. Pharma is run by Mera Dawai Private Limited. The deal may result in Flipkart gaining access to technologies of this platform. Pharma handles the pre-sorting of drug prescriptions, over-the-counter medications, and vitamins into personalized pockets organized by date and time. Meta has confirmed the launch of Meta Verified, its own subscription model similar to Twitter Blue. Meta Verified's feature include a verified badge, more protection from impersonation, better customer service, and increased visibility and reach, and exclusive features like stickers and stories. So, as per Meta Verified, once a user's profile is verified, they will get a blue tick next to their names, which has become a status symbol over the years. Currently, the Meta Verified is being tested in Australia and New Zealand at $11.99, which is around 990 rupees per month on the web, and $14.99, which comes around 1,240 rupees per month on iPhones. Meta Verified's price in India will likely be adjusted to appeal to a wider audience, but if the company retains the price to 1,200 rupees, the subscription will be more expensive than Twitter Blue, which is currently at 900 rupees, and even Netflix's premium plan, which stands at 649 rupees currently. With that, it's a wrap on this week's Companynama. See you again next Saturday with more from corporate and startup world. Meanwhile, do watch our exclusive report on the latest clarifications made on digital lending guidelines only on FinoMoney, the FinTech show. Have an amazing weekend and stay tuned to Money9.